Hello everyone, welcome to my channel. Um, so in this channel, I'll be going over my portfolio and some stock analysis. Hopefully, I can upload a video every day, and so sit back and enjoy. I'll start off with my current portfolio that I have. Um, I like to use Yahoo Finance to have everything in one place, all my watch lists, and to see how my portfolio is doing. So currently, I have six stocks in my portfolio. That's AMD, um, e.l.f, Cheesecake, Nike, Celsius, fuboTV. Um, and I'll go over each one of them to kind of reason out why I bought them and also go over my potential purchases coming in the next couple of months. I do have a total valuation right now of 34,781. I am in a loss right now because of the recent market downtrend, but otherwise, I won't talk much about what's going on with the market. I'll most likely release a video tomorrow and then kind of go over what's going on in the near term, and then possibly how the next few months are going to turn out. I am new to stock market. I mean, I have been researching about stocks over, say, about 8 years, but I never had the money to really put in the markets until recently. So, anyways, I do invest every month, usually a couple times a month, and so you'll see what my positions are and then also how they're growing over time. Hopefully they go well, but it's not always that they are successful, the strategies. So first off here, we'll go to AMD. Um, AMD stock, there's no introduction to it. Everybody knows it's one of the competitors to Nvidia. I believe it's a great stock, especially how it's evaluated right now. Looking at the forward PE is like 22.22. The trailing PE is 103, which is kind of high for this sector right now. But if you look at the forward PE of 22.22 and then looking at the semiconductor sector PE, probably averages around 35. So if this stock were to stay at this price right now over the next 1 year, and hoping that all the earnings are as expected to the analyst, then the trailing PE will be 22.22. So I don't think that's the case. I think AMD is going to beat the analyst expectations um, going forward. And looking at the revenue coming annually from 2021, absolutely just crushing it, 16 billion to 23. They had a little downtrend in 2023 and then going back up. And then going into the future, if you look at the current year EPS average estimate is 467 compared to the last year of $3.31. So that's a really good growth rate here that you can see. And you also see the revenue estimate for 2025. The average estimate is $31.7 billion dollars. And some analysts are also expecting it to be as high as $35 billion dollars. That's a 23% um, sales growth if you look at the average, and then the year after about 38 to 45 billion dollars. That's a huge growth. um, and also looking at the EPS, AMD doesn't really surprise as much as how Nvidia did from 2021 to like now, with like 20%, 30%, 40% surprise EPS, actual EPS compared to the estimates. But overall, the growth estimates is for this year, I mean, 41.1% compared to the S&P 500 of 10. So you're in a very good position owning this stock, AMD, and also you got a great CEO, especially Lisa Su, who took over Intel in the CPU area, and then now she's going after the NVIDIA, especially the AI chips, going after the H200 from NVIDIA with AMD MI 300, 325, and then 400 likely next year. So positioned really well. Oh, look at this. On Sue's watch, AMD's market cap has grown from 2 billion to 175 billion in a decade. So that's huge. You got a great CEO like this, knowing the market trends and adapting the company towards that. This is the type of CEO you would want. So I see that AMD stock going forward to be by 2026, 2027, somewhere around the 450, $500 range. Just looking at the revenue growth and the EPS growth, and it's probably over time. The trailing PE is going to land somewhere probably around 45, 50. So well, we'll see how things turn out for AMD. And more recently, this article popped up about AMD. This is Lisa Su says Radeon RX 9070 series GPU sales are 10 times higher than its predecessors for the first week of availability. That's huge. So if you're looking at the gaming industry, obviously they were struggling a little bit previously, but this is just huge, 10 times. Um, so I think AMD is very well positioned. The CEO is doing good. A lot of great products coming up. So I have no problem having a pretty big stake of my portfolio in AMD. I have about 160 shares. Average cost per share is about $113. I'm comfortable with that. And if it goes down, I'll probably buy more. Um, but yeah. And the next is e.l.f. Great company overall. It's just struggling a little bit with the stock price. If you look at the overall 1 year chart, my gosh, $218 to $64. I don't think I've ever seen a PE ratio of e.l.f. at 38. And if you look at the statistics, there's some interesting things here. The forward P is 16.92. My gosh. Like, this is the stage where I would say that people who are selling shares at 64.83 is more on the delusional side of things because this is insane. So yeah, personally, I think this is pretty cheap for e.l.f. stock. And looking at the growth rate, it's really good overall. Quarterly revenue growth 31.1%. And more importantly, like looking at the analysis, overall the cosmetic industry is struggling. If you look at other companies like L'Oreal, Estee Lauder, um, they are struggling the past 1 year, and then also the future guidance for this next year is not so great. And also the Trump tariffs doesn't really help with the news. But if you look at e.l.f. products, they're more for middle class to very attracted to majority of the teenagers and middle class people. So, and the products are very fairly priced and they're pretty good quality. Looking at this current year, average estimated EPS of $3.33. So The year ago EPS last year was 318, so it's not a big growth here for this year. But I personally believe that they're going to beat this 333 because if you look at the tariffs, like Trump is adding what, 10% or 20% tariffs on the products made in China. e.l.f. A lot of e.l.f. products are under $10. So if they're gonna bump up the price from like $6, $7 to like $8, $9, I don't believe that the customers would really notice that, or even if they notice it, it's not gonna make them not buy the products just because they have a really strong base, especially among the teenagers and the young generation. So you got the revenue estimate to be 1.31 billion. That's about almost 30% growth rate from previous year. Looking at the EPS estimate, I would say the analysts are more conservative for this EPS estimate. I believe it's going to be much higher, probably around 370, around that range. And then if you look at the growth rate, not great for this year, but it's going to take some time for e.l.f. to really um, struggle through and go through this phase of the company just because of what's going on all around the world. It's not like some other beauty products are doing really great. They're all in the struggle. But there's one thing that I want to show you guys here is this is the quarter three earnings for e.l.f. that was released. And he's the CEO, Tarang Amin. Great CEO. Absolutely like built this company from the bottom up. And the net sales, 31% increase. And look at this. This is what um, is just insane. 24 consecutive quarters of net sales and market share growth. And also one of six consumer companies out of 546 to grow 24 consecutive quarters, averaging greater than 20%. And just one of one cosmetics brand out of 988 to gain market share for 24 consecutive quarters. That is huge. Um, and 40% net sales growth for the fiscal year 2025, and also gaining market share. And more importantly, what I really like is their brand in terms of the social media growth. They have like 5.6 million members, more than 3 million downloads. Um, Look at this. So this is the entire cosmetic category, like where it's like minus 5%. And then you see e.l.f. Cosmetics growing at 16%. That is really good for this company. So you got a good fan base, a good consumer base, and you see that these e.l.f. shelves are literally everywhere, like Walmart, Dollar General. So they know where they're targeting. You know, if you go to Dollar General, a lot of times they're opened up in like small areas, and you, you know it's available for all the consumers. And I went to Ulta Beauty with my wife, and my God, like there's an entire row, like front and back of just e.l.f. products. And so it's good to see a brand, a small company that has taken so much presence in this such a competitive market. So that's kind of my take on e.l.f. Um, and my next stock that I want to go through is cake. It's a Cheesecake Factory. Um, I own about 100 shares of it, averaging around $50. The reason why I bought this company is not because of what's going on currently or if it's valuated pretty cheap or anything, because if you look at the previous history of the company, I mean, it was trading much cheaper before the forward PE. So it's not that it's cheap right now, but what they have going is their other restaurants like Flower Child and North Italia are absolutely like growing in terms of restaurant numbers year over year. And the most important restaurant that I really like for cake is Flower Child. And their company, Flower Child Restaurants, is comparable more towards Chipotle and also Kava. And you see that the popularity of Chipotle over the past 10 years, it just went crazy. And so people love that type of product. People like something similar to it, healthy, organic. So they want to capture that market. And I'll just go over this analysis and then I'll show you what they're planning on doing. So they have a overall growth rate of pretty nominal, and so about I would say like maybe around uh 7-8% growth here compared to previous years, and also revenue growth is modest, about 6%, and then you don't really see much like it's not going to be a double-digit growth, but when you compare it to like Chipotle, which is here, I'll just bring this up here. Chipotle is like $67 billion company, and Cheesecake Factory is merely a um, $2.6 billion company. So you have a lot of potential going forward, and it's not uh, like price, it didn't crash or anything in terms of share price. It was the high was $57. Now it's a 49.68. So it's a good price to get in, but this is a stock that I want to hold for likely for another 10 years or so and see this stock grow to somewhere around how Chipotle has gone, or even Kava. Kava is trading at a very high valuation. And so by the time that all investors see what Cheesecake Factory is, I mean, it's gonna go super high. So I believe that Cheesecake is gonna grow really high, and once the market starts uptrending, it's probably gonna be somewhere around $100. So I'm quite hopeful and bullish on Cheesecake Factory. So Cheesecake Factory, I have 100 shares. My average share price is 50.67. By the way, e.l.f. I also have 100 shares at average price of 82.83. Huge drop. But I'm not even worried about e.l.f. I think I'm just going to buy more shares going forward, and it's going to be good. And the next is Nike. No introduction here. Great, great, great business. Um, Sorry, I totally forgot. I wanted to show something about Cheesecake Factory here. So the Cheesecake Factory also owns Flower Child, and Flower Child is more of their healthy eating, uh, Chipotle or Kava type foods. And what a brand presence. They really are growing pretty fast, coming soon. They're coming soon in Dallas, South Lake, Tennessee, Franklin. And you see a lot of these now open in Indianapolis, Tempe, or Temp. I don't know how to say that. But in Florida, they're entering that market. So I think they have a great potential. And another thing about Cheesecake Factory is this news that was published in December. Cheesecake Factory just announced plans to open 585 new restaurants. And so this is not just Cheesecake Factory itself, it's their North Italia restaurant and also their Flower Child restaurants, which is, I believe, I haven't tried the North Italia or Flower Child just because we don't have so much here in Florida. That's where I live. But Cheesecake Factory is great and it's always packed. Next here is Nike. Sorry. So Nike, no introduction again. Great company. Overall, brand presence around the world is just amazing, just fantastic. And it's not the first time that Nike is struggling. If you look at, back from the 90s, they had few ups and downs, but if you look at the overall stock, it's gonna go up. And we have the new CEO, Elliot. He's gonna do great. He was always like with Nike. He retired, brought him back to kind of save the company from all these competitors. And yeah, you can argue that there's a lot of competition nowadays, and there was a lot of competition back in the day when Nike was struggling too. Adidas, Puma. So it's not something new that Nike has faced. People are saying that Deckers, like the Hoka shoes and On shoes, they're becoming quite popular. But if you look at the previous struggles of Nike, they have always come back. They know how to turn it around, and they've done it in the past, and they're going to do it again. I see that the forward PE is higher than the trailing PE, and that's okay. And I'm okay with that. For me, it's long-term hold for me, and one day I believe that I truly believe that Nike stock is going to go to somewhere in 100 $120 in the next couple of years, and that's okay. I'm a long-term investor. I'll slowly add on at these prices. Man, $63. I wonder at what point in the past where Nike was $63. Not even 5 years ago. Maybe some. No. If you look back, so Nike was around $63 in 20. When was the first time it reached? 2015, 10 years ago. 10 years ago. So easy company, no brainer here. Estimates are low. Analysts are gonna make it low, and we're just gonna have to see how it does. And I think it's a great company to invest in. And they're gonna turn it around, probably not this year, likely 2026, 2027. And a lot of times these stocks move way before that they turn around. So you might see like 32 PE ratio end of next year, but before 2027, it's gonna go up, and you don't want to be late to the game. And they also pay a pretty nice dividend, 2.5% dividend. So that's a plus. Um, I don't know much about any recent news about Nike or anything. I think it's just a company that you trust, you hold on to it, and if it goes well, it goes well. If not, oh well. Next on the list is Celsius, a big retail stock here. A lot of retail investors own this stock. Probably not anymore after looking at that big downfall, 59% from the $96 highs. Um, I believe it's a company that is gonna go really far, even if it's at like 6-7% per year and growing international markets. It's gonna do really well, especially after the new acquisition of the Elani brand. So they have a really good following in the healthcare sector, healthcare um, uh, in the gym and just health maintenance. Functional health drinks is what they call it. So their P is definitely not on the cheap end. Here it's 74.78 and then forward P is 38. So they recently bought the Alani with some cash and also some stock. So you'll see some addition of the amount of stock. So overall, they also went through that Pepsi distribution thing. Pepsi bought way too much, and then they just have a lot of them uh, in their inventory. But now I don't think that should be a big problem going forward. Looking at the financials here, and look at that growth. 2021, 300 million, 2022, 600 million, 2023, 1.3 billion. So this is where they kind of had that Pepsi distribution problem, but I believe that that's over. And with Alani acquisition, the revenue is going to be much higher. So 3365, I think it's a little bit on the lower end. So uh, in terms of analysts wise, I believe this stock they're averaging about 38.76. But look at that growth. Year ago EPS 70 cents. Their average estimate EPS for this current year is 91 cents. So that's a good growth. And sales 1.3 to 1.8, 32% growth there. And if you look at the Celsius growth estimates, 30%. So positioned really well, and I believe this stock is gonna go up in the next couple of years to somewhere in the 40s, 50 range. Uh, Good company. And then the last but not least is another thing I want to show with Celsius is this. Look at this. Celsius stock surges 11.5% as teen market share hits 35% for energy drink brand. This was in October. I read this article and I was like, man, this is like super cheap stock, especially with the amount of growth that they have in the markets. Just absolutely amazing to see these companies. This is what I wanted to read. The company's growth strategy includes international expansion with recent entries into markets such as France, the United Kingdom, and Ireland. This move aligns with industry projections from Straits Research, which suggests the global energy drink business is set to expand at an average annualized pace of 8.5% through 2032. And look at this, guys. US energy drink market. If you look at Red Bull, definitely the dominant in energy drink market, and then Monster. Look at this growth rate, 38.2%, obviously decreasing from 2022 to 36.6 now. And look at the Monster, 31.3 to 27.5. And then look at the Celsius, 4 points. They doubled. They doubled, almost tripling. But you see this a little lower in this market share. So hopefully they can come back and take little chunks of Monster and Red Bull market share here. So I don't really. There's a lot of energy drinks out there like NOS that I've seen it since I was a little kid, and Celsius was there, but I've never thought that it would take presence of like how it grew so much in these recent years. And if I go to the gym, Celsius is there. All the hospitals carry Celsius just because most of the hospitals they have the Pepsi brand there. So yeah, I think it has a good story and it'll grow in the next coming years. Good company. And the next stock that we're going to see is fuboTV. Just to update here, if you haven't known, I have about it's a Nike share of 62, average price of $78. And then fuboTV, 300 shares, average price of $3.07. Celsius 60 shares, average price of $30.88. I'm not too worried about this decline right now. I think my investment strategy is long term. I've been following markets for over 12, 13 years, but I've never had the money to invest in it. So I know some knowledge about like when the market's going down, going back up, how to analyze the companies and choosing some good ones out there. So now that I do have money, I'm just going to follow those steps and making sure that I don't go beyond my boundaries. So here we'll analyze the fuboTV real quickly. Um, there's obviously they're not making much profits here, but if you look at their statistics, their revenue growth is absolutely insane. Um, from 600 million in 2021 to 1 billion 2022, 1.3, 1.6 billion. And overall, their gross profit is also increasing. And if you look at their cash flows, look at this, slowly growing their cash pile. Their operating cash flow was negative 300 million to like negative 79 million. So you see that there's an overall uptrend in their free cash flows as well. And then obviously they're doing the Disney partnership deal. So if that goes through, then you can see this stock going up pretty high with like $6 million, 6 million subscribers. I'm sorry, but this is pretty interesting. How Disney deal with shake up sports streaming. And if you look at here, Disney will own this 70% of this new venture of Hulu plus live TV business with Fubo to form a new streaming platform. And so Fubo also dropped its litigation against the Venu Sports, which was they were planning on launching that by like Warner, Discovery, and Disney's ESPN. But now they're going to drop this lawsuit. Hopefully, this deal goes through, and Disney is just going to give fuboTV $220 million cash for that, for dropping that case. So I think it has a great potential. It's just based on the revenue and based on the valuation. I mean, they're making more revenue than their market cap. And if you look at this analysis, it's really interesting. They obviously were losing money the past year. Last year was minus 29 cents. Now this current year's average estimate is negative 7. So that's a good bump up there. And they're estimating the revenue to be about 1.67 billion. About currently they're around the same range as the current year. I think they'll beat it just because of the revenue growth. And then in upcoming years, we have the FIFA coming up. So I think in the next couple of years, the stock is just going to go up. Um, Look at this growth estimates 75%, next year 218%. So there's a pretty high potential for fuboTV, and now that the Disney deal is going to go through, there's no much chance of them going bankrupt. So I think it's a great stock to own, but obviously I wouldn't own a lot of it. You know, just a little. I own about 300 shares worth about $900 here. So yeah, this is my portfolio. If you like what you guys saw, then definitely leave a like. We'll be posting new videos daily and also doing more of stock analysis of the stocks that I do want to buy. I think the stocks that I have here, I believe they have great potential and they're trading at pretty cheap prices. So I do believe in turnarounds, and I'm just going to go here quickly to see the potential buys that I currently have. So these are some of the potential buys that I have in my watch list in here. So number one, I kind of ordered it through like my liking and see where they stand and at what price I want to get them. Like PayPal, it's definitely a buy here at like $65. If you look at the PayPal's financials, what a growth. 25 billion to 31 billion in like 3 years. Um, and if you look at the amount of um, money that they spent in terms of uh, buying back shares, it's absolutely insane. Um, Repurchase of capital stock. So look at it from 2021, they spent about $3 billion in share purchases, share buyback, and now last year they spent $6 billion, $6 billion on share buyback, and look at their cash flows growing. It's a nice consistent growth here. So I have no problem with PayPal. It's a great company, and then they also own Venmo. Nice little growth here, probably about like 30%. Um, sorry, about 10%. Um, I'm not too worried about PayPal. I think it's a very strong buy. If you look at the analyst price targets, I don't see a single price target here that is below the current price right now. Not one. So great company. Gonna hold it. Just wait a little bit to get my paycheck and gonna buy some PayPal. And the next stock that I was looking at is Toast. So Toast is a company that provides software services for restaurants. And looking at that company, sorry. So it's a little bit down. So this company provides software services for restaurants, and I really like their business model because they don't charge like a per month service fee. They actually charge a percentage of the total revenue. So if the economy is booming, these guys are going to skyrocket. But if the economy is slowing down, it's not like they're going to um, like just go bankrupt or anything, or restaurants stop using their service. I think they're still going to use it. They're just going to make less revenue, that's for sure. So their revenue model is primarily based on the restaurant's revenue, their business model. P is obviously really high, 1120, but take a look at this. The forward P is 40. 40. Why? Because they're just making profit right now. They just recently turned profitable. So going forward, I think they have a very high growth, and they're going to turn this around. And it's a small company, recent startup. It's been there for a while, but been in the stock market recently, less than 10 years. And look at that. So I have no problem owning this share. Just waiting for in the next month or so, I'll more likely buy them. And if you look at this EPS growth, that's a nice like about 40% growth here, and the revenue is gonna be 22% growth. So great company overall, 66% growth estimates for this year. Great company. These are the companies that you find them, you buy them, and then you keep them, hoping that they're gonna be in the 100 billion, $200 billion company sometime. Unlikely to be at that level, but you can buy it for the short term, going into next couple of years. See how that turns out. And the next few companies here, I'm just going to talk about them. Meta, no introduction, Steel deal at 576. This company is going to go really high. I actually bought Meta around 470 previously, sold it around 710 around there. Just wanted to buy some of the other share stocks that I had in my portfolio. And then Adobe looks pretty good. Trade Desk, my gosh, 141 to 55. That's insane. I really like Caterpillar too. I think overall they're one of those dividend aristocrats. I'm not a big dividend person. I like to find these like broke, beaten down stocks that have very high growth potential. But Caterpillar is good. I'll think about it once it goes like, less than 200. Lululemon, personally, great company. Great revenue growth. Obviously, this tariff talk and everything's going to affect them. So the stock's down 15% on Friday. Shopify is a good company. I think it's trading a little bit rich, but it's always been like that. Amazon, what a company. 600, more than $600 billion in revenue. And if you look at the one thing about Amazon, look at the forward PE, 29.24. I've been watching Amazon stock since 2017, and I have never ever seen a forward PE of 29 on for Amazon ever. So, $637 billion revenue. Great company, and obviously at a great price. Oh yeah, and then there's other mostly retail type stocks here that I'll talk more about it going forward in the channel, and some foreign stocks here. So yeah, guys, thank you so much for watching this video. If you like, please like the video, and if you want to subscribe, you can subscribe to the channel. Thank you.